Have you ever wanted to understand Forex trading? It's a thrilling opportunity for many. Today, we'll break down the basics in simple terms. Forex, or foreign exchange, is the global marketplace for trading currencies. This market is the largest, with a daily trading volume exceeding $6 trillion. But how does it work? Forex trading involves buying one currency while selling another. Currencies are traded in pairs, like EUR/USD. The first currency is the base currency, and the second is the quote currency. Let's go step by step. Firstly, you need a Forex broker. Brokers provide the platform to trade. Choose one with a good reputation. Look for features that suit your trading style. Next, understand currency pairs. Major pairs like EUR/USD, GBP, USD, XIU, USD are popular. They have high liquidity and lower spreads. Minor pairs feature less traded currencies. Now let's talk about pips. A pip is the smallest price move. In most pairs, it's the fourth decimal place. Knowing how to calculate pips is vital for profits. Leverage is another important concept. It allows you to control larger positions. For example, with 100.1 leverage, you can trade $10,000 with only 100. Risk management is crucial. Set a stop loss to protect your capital. Never risk more than you can afford to lose. Now imagine two friends, Alex and Jamie. Alex uses a demo account to practice trading. Jamie jumps into live trading without practice. Alex learns to manage trades and succeed. Jamie faces heavy losses. Who would you want to be? In summary, Forex trading involves buying and selling currency pairs. Use a broker, understand pips, and practice risk management. Forex trading offers high liquidity, 24-hour access, and many opportunities for profit. However, it also carries significant risk, so education and discipline are essential. Ready to dive into the Forex world? Start practicing and build your trading skills. Your journey starts now. Thank you for watching. Subscribe to ChartCraft FX for more trading.